So what does this all mean for, say, euro? So we are currently trading 10.15. Here's what, this was yesterday's little piece here. I'll just read it out. So, right, it's been a little over a week since euro made the low at 108.06, right on the trend line from the 2017 low, right? Here's that 2017 low trend line. Pretty simple. Connect 2 points. Hit that level. Okay, the pullback from the 310 high appears in 3 waves, and price has held the 618 retrace of the rally from the low. So, we're on an hourly chart now. So this is what I mean by that, right? The pullback appears in 3 waves. A, B, C, right? And we've held the 618. So take your retrace, 618, 109.26. We've pretty much held that. In fact, the low, I guess that was yesterday, was spot on 109.26. Point being, there are actual reasons to be positive or constructive, if you will, on euro. I know that some news just came out about Ukraine and Russia, and there being, the possibility of some sort of, peace agreement, if you will. And that's fine from a humanitarian standpoint. That's pleased. I hope that happens. But however you make your decisions, right, you got to be consistent. I don't make my decisions on that. I'm not privy to that information before anybody else. I can do, look at these charts and identify levels and manage risk in that manner. So again, let's go over the evidence here. We hit a trend line that goes back to 2017. We had a pretty strong rally, which, you could claim is kind of impulsive, right? It's not perfect. And then you had a 3-wave pullback, which is corrective, and you've held the 618 retrace. So heading into FOMC with all of that makes me, kind of think higher in euro, if you will. And the level to look towards in the very near term, right, is probably like 112.15, 112.30. So this orange line here, this thick orange line, that is 2022 VWAP, which means volume weighted average price. And that is right there, where you also have 2 legs up from the low, right? Also, you've got former support here, so nice horizontal level. Also, by the way, it is the March month open at 112.18. So, that's a sticky level. Like I like to call it kind of a magnet. If we get there, it'd probably be a spot where you want to, take some off if you have some on the long side. But we are trading right at the key kind of breakout level, if you will, at 110-ish, 110, give or take 10 or 15 pips. And here's why that's a key level. So you can see this like magenta bar here. It has like, little dots going across. That is when you have a very high volume level, right? So that is 110.11. This is futures, but I use it as a proxy for spot. So that was a high volume level. As you can see, it was resistance. And not coincidentally, we just made a high volume level at the exact same place. So there is something going on around 110, 15 or so. Elephants in the room playing right there. So yeah, we'll see what happens with FOMC, but to be call it a kind of a line in the sand, right? 110.15, bullish above, very cautious below. If that makes sense. All right. I will share my screen once more. But at Scandinavian Capital Markets, we are looking for trading talent. So We've revamped our, well, at this point, probably, I don't know, 6 months ago, we revamped our proprietary trading program. And if you would like to, become a professional trader and trade with us, visit this page, okay? We are funding up to $2 million. There is an assessment fee, right, that you got to pass the assessment. If that happens, you get funded. There is no time constraints on passing your assessment fee like other places. But yeah, check it out and come trade with us.